Hello, I'm Finola Burke from RaaS Research Group. Today we're focusing on respiratory equipment and consumables manufacturer, CleanSpace Holdings, ASX ticker CSX. Joining me to discuss the company's H1 FY26 results and outlook is CEO Gabrielle Carroll and CFO Bree Greeff. Welcome back, Bree and Gabrielle.
Thank you very much.
I'll start with you, Gabrielle. You had revenue increase 10% in H1 FY26 as flagged by your guidance, but you saw significant growth in Europe of 26%, driven by West Europe and the Nordic region. Could you talk through this growth and opportunities in the regions going forward?
Sure. Europe, does remain our most established market, of course, as I've spoken about in the past, and of course, therefore, strategically important for the company. And it's really encouraging, and it's been great to see 26% growth in the first half. And that growth in Western Europe, particularly in the Nordics, reflects, three factors and three important pillars of our strategy moving forward as well. Firstly, a mature distribution network. We've invested over many years in France and Western Europe and now the Nordics. We've invested in those relationships and building out those partnerships with those distributors over many years. Secondly, the regulatory environment is favorable. So there's strong enforcement of respiratory protection for workers, a strong safety culture. And in these markets that really prioritize compliance and ergonomic protection for workers in industrial contexts, make it an attractive market, therefore, for CleanSpace. And finally, I think product and market fit. So we're a lightweight PAPR, ergonomic as well in design. And I think that resonates really strongly with some of those sectors that are particularly prevalent in Western Europe and Nordics, such as manufacturing and infrastructure. So I think these are the factors overall, and essentially what we've been seeing is continued broad-based distributor execution of our brand and end-user adoption. So we haven't seen a single sort of contract or one-off event in Europe. It's really been a broad-based, execution and acceptance of our product and our brand. And therefore, what we're really looking forward to doing, of course, is to continue to roll out this strategy in other parts of Europe, in DACH, for example, and we'll be taking that stepwise and really building on that foundation that we've demonstrated in France and Nordics to replicate that performance over time in expanded regions of Europe.
And Gabrielle, Asia-Pac and the rest of the world saw a decline in growth in the half. What were the key issues behind that, and do you expect growth to return to those regions in the near term?
Yeah, so Asia Pacific and rest of the world really represent a mixture of countries and markets of importance to CleanSpace and our future, and that includes Australia, but also parts of Asia and South America. And what we saw in the first half, really a decline in that broad region, was driven by three things. First, there was a tougher prior corresponding period that included in that history several one-off business wins, particularly at the end of 2024. We did see a specific disruption in Indonesia following a landslide incident at a key mining customer. And that's obviously impacted repeat orders in that market. Now, that mine will come back online in another several months, but in the short run, of course, it's had an impact to our business and, of course, broadly to their operations, sadly. Moving out of Southeast Asia, we did see slower pipeline development. It's true in parts of Australia across certain sectors. And there are certain regulatory conditions in Australia that kind of explain why that might be, particularly how the regulations have evolved and the enforcement of regulations has evolved in Australia is making more distinction between tight-fitting and loose-fitting type of respirators. And CleanSpace today is a tight-fitting certification respirator. And so it's just about really being very laser-focused on those sectors where that is most relevant to the user. And we expect, that when we are able to expand our product range, which we expect to do in the not so distant future, that will really improve our ability to build momentum and return momentum in Australia. And as we're building out pipeline opportunity in our rest of world markets, we're going to start to see that coming through as well on a more recurring sales basis as well. So very optimistic for Asia Pacific and rest of world overall.
And Bree, half 126 saw a 40 basis point increase in the gross margin to 75%. Is this sustainable for half 2 and beyond?
Yes, so we believe gross margins in the mid-70 are certainly sustainable. The improvement in H1, as at the end of FY25, we mentioned that there was improvements in operational efficiencies around freight, sourcing improvements, and component quality, rather than one-off mix effects. We also had a price increase effective 1 Jan, so that will further add to our gross margins. And we don't manage the business to maximize short-term margin at the expense of growth. So at the current pricing and cost structure, we remain comfortable guiding at the mid-70 range.
And Bree, the A dollar has appreciated against both the US and Euro recently. How are you managing currency fluctuations, and what's the net impact on CleanSpace?
So we generate a significant portion of revenue in Euro and USD. So a stronger AUD does create translation headwinds on reported revenue. However, we're not purely exposed on the revenue line. We also have USD inventory purchases and a European and a US team that we pay payroll. So there is a hedge there. As a result, while revenue translation can be impacted, the net EBITDA sensitivity is more moderate than a simple top-line exposure would suggest. As a broad guide, a 5% strengthening in AUD would have an estimated low six-figure impact on our half-year EBITDA after allowing for natural hedging. It's manageable within our guidance range. At our current scale, we primarily rely on natural operational hedging rather than formal financial programs. I have engaged with various providers on an ongoing discussion as the rate moves, and we continually monitor exposure and would consider additional hedging mechanisms if volatility became structurally significant.
And Gabrielle, you launched the Smart App and Insights reports to clients in 2025. Is this product aimed at deriving additional revenue for CleanSpace, or is it about increasing the attractiveness of purchasing the hardware?
Yeah, at the moment, the primary objective of the Smart App and the data insights reporting capability is really about strengthening the value proposition around the hardware and really deepen those customer engagement points, because we know that it can help end user markets and users themselves really answer some of those critical compliance related questions. So at its best, really the reporting will help compliance documentation. It will help organizations manage their fleet, know what units are being used, when and how long a filter lasts. It will help track worker usage, as well as help organizations with audit readiness. So it can really have a broad-based application within an organization's safety program. And I think this differentiation will support the adoption of the hardware. It should increase our win rates and really increase customer retention as well. So we're really looking to the future of this. Obviously, right now we're partnering with organizations who are really probing these questions. They're common questions within the category. We're really looking to partner and better understand and help them, interrogate the data. And over time, as this matures, we will be looking at whether or not there is deeper analytics that can be had, where monetization and subscription rates might be a model that we'd like to adopt.
And Gabrielle, finally, you're flagging a new product launch late in FY26. Without giving away any trade secrets, how important is this product to future growth and achieving half to FY26 targets?
Yeah, so any new product, of course, is important, and it's the result of our understanding of the market, evolving market trends, and our desire, obviously, to be able to respond to more of that market opportunity. So it will certainly allow us to expand that addressable market size and strengthen our competitive position in our priority markets. But that said, our plan for H2 is not solely dependent on the new products, certainly not. Our H2 performance is reliant on, as I mentioned during the video earlier today when we announced the results, continued performance and strengthening performance in Europe, expanding our distribution coverage, and also our pipeline conversion. We do have visibility to some larger pipeline opportunities that we are progressing, and that may indeed close out in the second half. Our January pricing increase will flow through as well, and that will have top-line revenue tailwinds as well, and then ongoing growth in our existing portfolio and our consumables as well. So it's a multi-pronged approach, but of course, if we can bring a new product to market, we'll be very excited about that as well.
Well, thank you, Gabrielle and Bree, for joining me today to discuss CleanSpace Holdings H1 FY26 results. I'm looking forward to catching up with you through the course of the rest of the year to check on your progress.